Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that massive pump that we predicted here on Alpha Commission for the Bitcoin chart. Guys, let's just go straight over to the chart. Look at HNS, that thing is just pumping. The rest of the market taking a little bit of a breather as Bitcoin bumps into a little bit of resistance. Now, as you can see on the chart, we did pump up to grab that liquidity that I had pointed out on the chart the other day. Of course, we still have some liquidity down here, a bit over here. And so if we do have a deeper pullback, basically what I would be interpreting this as in its current posture is the possibility of forming some type of inverted head and shoulders, which could potentially take us to the upside. Of course, an inverted head and shoulders is a bullish pattern. And so if we do have a pullback and then are able to reclaim the levels that we've claimed today, then that would actually be very bullish. And then we just have to watch out for some market maker shenanigans. Guys, if we do just take a look at the price action as it is, I am on the 2-day because I do want to point out several interesting facts on the 2-day. The first of which is that we are above that Bollinger Band's midline. And so if we do close in 3 hours above the Bollinger Band midline here, that is going to be an indication of some supportiveness in the charts. And maybe we do have a pullback, but it looks like this area is finding some interest up here. Guys, one thing that we haven't really talked about enough on this channel, and it's my own fault because when I started this channel, I really wasn't big on support and resistance. As you know, I'm a momentum trader, and so I don't really pay attention to support and resistance as much as some other kind of classical traders might. I look for momentum and volatility, and then confluences with various indications, including support and resistance. But what I want to do is show you how I have become a support and resistance king over the last 2 years. And of course, nobody is a king. You can always make mistakes, but I have done my best to try to shore myself up in this regard. And so let's just start with some basics here. If we zoom out on the Bitcoin chart, then what we can see is that we have an overall trajectory on this chart. And I would say that if we just include the last cycle, that gives us a pretty good idea. Now let's just throw on where we might be seeing some type of support on these angles. And you can see right here why we had a bounce, why I was bullish at 15.5, why I was saying that we should take a chance at 16K and then again at 16.5K, which was recorded on the Alpha Commission, videos, guys. So again, the proof is in the pudding. We took a chance off of this because I do look at diagonal support and resistances, whereas a lot of guys just look at the horizontal. And if you had just looked at the horizontal, you would have completely missed this structure right here, which clearly, had it broken down bearishly, could have been an epic disaster and taken us to those 8K levels that everyone was hoping for, including myself at the time. But the fact that we recovered this level on a diagonal basis, and then especially this higher low right here, suggested to me that on a horizontal basis, this was a double bottom. This was a market maker shakeout to basically take out all of the stops over here, and that we were likely to go significantly higher. So if you guys wonder, how did Alpha Commission call the bottom of the market? Well, here's my secret, guys. Here's my secret. And you can see this is working on the macro. This is almost a 2-year structure that we had being built up here. And of course, if I draw a line here, what do you see? Of course, this is my favorite play, the falling wedge. And where would be a measured move for a falling wedge? Well, in this area, and we're just abouts in that area. So, on a just measured move basis, this structure has pretty much fulfilled its purpose. And so, Alpha Fam, if you guys have been taking these plays, you guys are just absolutely killing it. And now let's just go forward because, of course, that's old news. And guys, what else do we have? Of course, we ended up putting in a structure here on the horizontal where we did have a deviation. Of course, this was the deviation, that kind of manipulation area. And then, of course, we just took it higher from there. So going forward, we then, proved this as support, this kind of midline over here. And then we took out this area when we surpassed it, and we had that little bounce here. We had these rejections. We flipped those resistances into support. Then, of course, we had this area, which was the big one. I called this one because, of course, we did have this massive wick over here. We had this nice rejection over here, this nice rejection. And so we came down off of this falling wedge. I said, look, that's headed right towards this rejection area. And if it holds that, that's going to be super bullish. And so again, guys, the Alpha Fam took this trade, and again, you guys are just absolutely killing it. I'm really proud of how you guys have done in this bear market. Couldn't be prouder of the guys who really stuck around and put in that hard work. Guys, of course, we do have some overhead resistance that we are contending with. This is kind of that granddaddy resistance because it is holding up the entire top of the market, and that is what's standing in our way to get to the next bull run. Is this huge? It looks skinny, but it's a massive amount of resistance just overhead, trying to constantly push us down. And of course, every time we try to get a footing above it, we just end up breaking down so far. Couldn't even reach it down here. And so we are still contending with this. Even if we zoom in, you can see that we spiked up as soon as we tag it. Pow! We just got rejected. And of course, that's where I was projecting for the Alpha Fam, that when we had that mean reversion, that we would be able to tag that area. And, we called it almost to the penny accuracy. So guys, again, you guys are just absolutely killing it. And then we had a small deviation here, but Mr. Support came into play and we just popped up. Guys, let's go ahead and moving forward. You can see, of course, this zone does extend a bit wider. No need to fill the middle here. There is a little bit of price action that could happen. So if we flip this area, yeah, we could chop around like this. We could chop around like this, and maybe that would happen, get us back to that 31K area if we're able to flip this kind of $29,000 area. But that's neither here nor there yet because we're not even close to that. Currently, we're at 27,000 about, and we did take out this liquidity that mic there, so I can delete that. If we do come back to the bottom, no skin off our backs. We have Mr. Support down here, right? Now let's get into the complicated stuff because, of course, we do have this diagonal resistance, and that diagonal is what we're bumping our head into right now. Now, if we do flip this and turn this bullish, then what we could expect to see is perhaps something like this, and then we'll take another crack at this one and see if we can't pop up there. But right now we do have this diagonal and we have this overhead to contend with. So if I was to make a prediction that if we push through this diagonal, then probably we're going to have some type of interplay like this. Okay, that's what I'd be looking for, making a higher high if we're still bullish on there. We could chop around, we could do anything, we could even have a fake out or something like this, and this diagonal will be extending down still, and we could make another go. So guys, but the thing that I want to point out is that we really do have to flip this diagonal. Now, of course, we can't just be good with just that diagonal alone, because this area is very complicated. And as you can see, even if we break above Mr. Resistance above our head here and here, we have another kind of mid-channel resistance. And what do I mean by mid-channel resistance? Well, normally when I'm making my charts and I just have a natural range, I usually use a solid line, okay? So these would be my solid lines, and this would be just kind of a dashed line, okay? You can see that we push through it, But by the same token, you can see all of this price action kind of hanging out on this side, all of this price action hanging out on this side, all of this price action hanging out on this side, all of this price action hanging out on this side. Doesn't that make it a lot easier to visualize? And so when I'm just using lines, I use a dashed line for this type of a arrangement where this is a hard limit, this is a hard limit, but there is some fluidity here. There is some kind of a mid-channel area where price action can pass through if you're able to squeak by. And so we are looking to squeak by that mid-channel. And should we get a rejection, then, we could end up putting in some type of a W here if we don't just break down, or we could pop up here and then we're going to start building up some price action in this area. And because this diagonal is a slant here, a slanted mid channel, where you can see if I drew a dotted line right here, okay, then you can see there's this price action here, there's this price action here, here, and here. And so there is a diagonal, not just this horizontal. And so what we could end up doing is getting trapped between these kind of mid-channels areas right here, and maybe fall back down, get caught by this support. Should we have flipped it, that'll be a retest of it, get back in here, and then build this structure and push back up. So there's a lot of configurations that could go on here with these supports and resistances. And then, of course, if we flip them, their characteristics also change, right? Once the bots and the algorithms and the professional traders see those things, they end up flipping their opinions on it because they think it's a good value or it's a bad value relative to what's going on with the price action. And then, of course, most people might forget about this one, but we do have this one from all the way back here where you can see price action up here, price action up here, just as a teaser, kind of a fake out, and then the rest of the price action was up here. So this was our deviation right down here on this diagonal, which then took us on an epic journey. Unfortunately, we broke back down, and that's why people are saying if we pop back up here, that's just going to be a lower high. If we're not able to fill up this whole space because of this diagonal or this mid channel over here, then what's going to happen is that could have just been basically a confirmation of the rejection from this channel, right? This channel up here, breaking down and then popping back up and hitting our head on it. That's going to be a confirmation of that. And that's what could send us all the way down. Where's that level at? Somewhere between 29 to 31,000. So again, guys, like I said, multiple episodes ago, multiple times, our level is 25,000, 26,000, 27,000, 28,000, and 29,000. And then, of course, the granddaddy up here at 31,000. And these just happen to be round numbers. They're not always round numbers, but those are good levels to keep in your mind, depending on how price action is kind of grouping, kind of bundling. You always see these bundles, right? So that's the consolidation areas once we break through a level up or down. And so look, guys, we have this one, we have this one, we have this one, we have this one, we have this one. I'm not going to lie to you. It's going to be a difficult process to break through this. And you can understand why a lot of traders are super bearish right now, but I do want to just continue to go forward on this trip with you because I told you I've become a little bit of a specialist on support and resistance these days. And so I want to show you some things that other people might not be noticing. The first of which is that we have a deviation here. Okay, you see this price action here, and then you can see this epic journey to the downside, right? This was actually a deviation on the chart, so I don't have to consider it when I'm making my support and resistance. That was a little fake out. That was nothing, not total nothing burger. The real resistance is right here, guys, okay? And once again, this is just kind of a little deviation that we might be having going on here if we end up really rejecting from exactly where we are right now, okay? That's why people can be super bearish right now. They might see this one and they might just be thinking that we're gonna break through, get rejected by it, and this could be just an epic dumpage. What could cause that to happen? Well, hey, maybe if the stock market falls off a cliff or if the Federal Reserve increases interest rates, then yeah, that's possible. Maybe it takes us to our support areas down here, in those kind of 20s. And so it's a totally valid perspective. No one can see the future in trading. We just have to be aware of these support and resistances, guys, not only on the horizontal, but also on the diagonal, okay? And so if I do want to just give you some hopium for where we could fall to, don't forget that I am specializing in these type of support and resistances these days, especially the diagonal has always been my favorite. And as you can see, we do have a mid channel here, right? A mid channel where this is our hard rejections, this is our hard support, and then we have this price action here, this price action here, this price action here, this price action here. And so if we do fall down, I do see the bottom getting supported at least in that kind of 20 to 18K area, okay? I don't think we're gonna come all the way down here. I think we're gonna get a little bit of interplay, a little bit of interplay, a little bit of interplay, okay? A little bit of wicks, all these type of things in that area. And so there might be some type of a play to take in that area if we do just start to capitulate with perhaps the stock market or Jerome Powell at the Federal Reserve or whatnot, okay, guys? So I'm looking at that. Now, if we do lose that, okay, guys, if we do lose that 18K area, if we lose this wick basically over here, then of course we could be looking at that 12K, maybe even a flash wick to 10 to 8K, okay, like some of the super bears want and what I wanted back here, but we just never got. And so of course we have to change our perspective. That's the whole point of this channel, is to keep you guys protected, Alpha Fam. And now you're starting to see the big picture, right? You're starting to see the big picture. Huge amount of resistance area right here. And so you're seeing what can happen, not just if we get rejected, but if we end up chopping and grinding through this. Well, guess what? We have another diagonal up here, and flipping that, it's almost like we're gonna break out. Okay, we're gonna break out, guys. So we do have to be aware that we do have some type of potentially hard limit up here. If I do just grab this resistance and just say, even on a deviation basis, let's say we have another common deviation like we had over there, then just using our current trajectory and maybe this diagonal right here, just kind of pull that along. We're gonna have a double resistance right at 33,000 to 35,000. Okay, so the next move, even if we push through all of this, go through the grind and push up through this, break through 31,000, break through 32,000, then I would see we might have some hiccups between 33 to 35,000. And you can see these wicks over here on this past chart. You can see this wick over here and also the tops of these candles over here. And so that would just confirm, yeah, that's probably going to be our next trouble area. So just keep that in mind, Alpha Fam. Don't feel too, rushed. Don't feel too, eager for everything. This is going to be a grind. This is going to be some work. And yes, we could have mega pumps and mega dumps, but there's a lot of support and a lot of resistance to work with for some complex trades. That's why I've been trying to take these little trades with you guys. We got to make some money while we are currently under that weekly Bollinger Band midline, which we are threatening to flip. Now, if we do just go over here, you can see, wow, isn't it a coincidence that my bull market theory, right, where we are in a bull market when we are above the Bollinger Band midline, isn't it an interesting coincidence that we are about to flip to the top of that at the same time that we are considering to flip this resistance up here bullish? Interesting, huh? Interesting. This was our top channel line of resistance that we have to break to re-enter the bull market. And so again, it's just an interesting bit of confluence, and it just suggests that my theory here is correct. While we are below this, we're in a bear market. When we're above it, we're in a bull market, and we're about to flip it bullish again on the weekly, guys. Now, you may say, okay, that's enough. Like, I've had enough support and resistance, but no, I'm going to throw one more thing at you, and this is going to be the curveball. So let's go ahead. Are you guys ready? Boom. Didn't see that coming, did you? Look at this, all the way back from 2017, guys. Okay, all the way back from 2017, this diagonal has been our support. And yes, there was a crazy world, event in 2020 that wicked us lower, and that's what all the perma bears are hoping for. But support, 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 support. Even right here, when we had this USDC or whatever, crisis, right? The banking crisis right here in March 2023, support right off of that thing. And look, where did we bounce on this? Of course, on this horizontal. But people are saying, oh, we're bouncing out of nowhere. We're coming out of nowhere. No, guys, look, we have this massive, massive 5-year trend line, almost 6-year trend line, right? That is just passing right beneath our feet. And if I wanted to give you guys one bit of uber hopium, it would be, yo, we have this massive support, basically zone underneath us. And if you look at what it supported a bull run. 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 Could it support another bull run, even if it's a moderate one that just takes us 70 to maybe 95,000, where you can see this kind of like line coming in here, right? Even if it's a moderate one, could it support it? And unless we flip underneath that kind of $22,000 area, yeah, we could wick down to the 18K area, like I said, right? We could wick down to our lows, kind of fill in this liquidity, just do some market maker shenanigans, just like we did over here, right? Just like we did over here. We could do that, but it's never happened before where we would flip underneath this, and then what? We're going to zero? Right? It's not going to happen, guys, right? So this is my bullish thesis, and if I wanted to leave you with some hopium, I mean, nobody can see the future, but I would call, just like I called over here, that this zone is the bottom of the market. And if you guys aren't hearing me, all right, we took this double bottom here in the alpha fam. We took this double bottom here in the alpha fam, right? If I had been around during this season, I would have taken this double bottom here at the alpha fam. And had we been around, making videos back here, then I would have taken this one with you guys, the alpha fam, and you guys would have been absolutely killing it. Okay, so there's a little bit of hopium. There's your bullish perspective from Alpha Commission, my little gift to you. Now, if we do break under 22,000, just be aware of everything else that we have going on, because I told you I'm trying to make myself a little bit of an expert in support and resistance. I didn't do the best job in the past, but I have a pretty high level understanding of momentum and volatility, and so I just really didn't need to use it because I have my own method that's a little bit different than traditional traders. And this can maybe look a little bit of a mess if you're just looking at the diagonals and the horizontals together. But once you clean it up, you understand it's very elegant. You have to be aware of these things. So for any of you guys who are just getting into trading, please do practice your support and resistance. And I highly encourage you to take advantage of concepts of diagonals, which really no one wants to teach you. Okay, no one wants to teach you, but if you just look at how pretty this is, how beautiful this is, you're going to have a lot more confidence in what you're doing in this market. Okay, I guarantee you guys. All right. Hey, now I did promise you that I would do an analysis of the 2-day because the 2-day is looking quite interesting here. And while Jerome Powell and the Federal Reserve tomorrow could end up just shaking this market up and just dumping it to heck if they increase interest rates, on our current course, what you can see is that we do have a squeeze on the 2-day that could just pop us up to this 28K level. Maybe 27.5 and then 27.8 and then 28,000, and then the sky's the limit there, right? We'd be looking back at that 30 Okay, area. Well, this is the weekly, so I can show you that just on the weekly, but the 2-day is going to show it a little bit cleaner. and you can see the confluence here and why we might be having a hiccup. There's the 300 day 2-day EMA right there, but we are about to close above the 200, even if the 300 is over our head. And what I can point out is that we have the 9 EMA right here. Let me just make that a little bit thicker. There we go. That red one, we have the 9 EMA supporting us, very bullish. All of that was bearish while we were underneath it, very bullish ahead of it. And then we're above the Bollinger Band's midline on the 2-day. And of course, we're just getting a little interplay with that 50. And, the 300 might also give us some hiccups. Now, what this could do is, just kind of chop us around, and then we end up getting a squeeze to that 30 level. Now, if I look at the 3-day, very similar orientation here. Probably not going to break that 200 EMA in the first crack. That was what we just attempted to do. Get a little bit of a pullback. And as long as we don't violate these areas, I would really say 26,000. Again, guys, these are just round. I don't know why it's round numbers, but 26,000. Okay, 26,000. 27,000, we're bullish. Above 28,000, we're very bullish. And above 29,000, I pretty much can confirm the bull market is back on. So, guys, that's pretty much your alpha for the day in terms of those levels, just using an EMA basis. But if you want to have kind of my standard levels just thrown off of it, I can show you that we do have a 2-day volatility pivot down here. And, that means that we have a lot of room to pull back, a lot of room, while still maintaining a bullish bias on the 2-day, which of course does close in about 3 hours, probably 2 hours when you see this video. Maybe it'll be closing when you see it or just after. But again, if we hold above the neutral point of control at 27,105, very bullish, we can pull back just a little bit, and we're still holding our momentum to the upside above 26,530. If we drop below that, yeah, we could have a deeper pullback to grab this liquidity. I really wouldn't want to lose that 25,648 area, but there's a little bit of liquidity underneath there. So if we do just dip down and touch our toe to this volatility pivot down at 25,185, no harm, no foul. It just means that the squeeze that we're undergoing here to the potentially to the upside just might have one more kind of shakeout before we go. Maybe it takes a little bit longer due to some Jerome Powell or the Federal Reserve market shenanigans. Underneath this area, we're going to be back in a deep bear market territory. So I don't want to get into that. Okay, you saw what those long distance support and resistances could do, and then of course the bullish control zone 29,305 confirmed. Okay, guys, if we get up there, confirmed bull market back on. And of course, a nice bias above 27,000, but I prefer to take out this wick first at 28 and some change. Guys, let's see. Do I have anything else for you? No, I would like to show you the previous pool that we had back here. And you can see that was right before we just took off. And so if I'm presenting you another 2-day pool over here, well, you better pay attention, okay? Because these things have a tendency to pay out for the alpha fam. And guys, just don't forget, this market can turn around on the Federal Reserve. So watch your stop losses, watch these lows. But you guys are absolutely killing it. That's your alpha for the day. Stay safe and happy trading.